All right, Trez, welcome back. Happy weekend. And Connor, thank you for joining us again.
Thank you for having me, Scotty. How are you?
I'm well, and guys, look, it seems to be working this Saturday. We're not intentionally doing this, but it just seems to be working out all right for episode 86 because I guess we can see how the dust has settled after another, interesting week. More interesting on the like the US equities, really, because Connor and I were just discussing that, and we've been talking about the Aussie for a little while now, haven't we? Like the past two episodes or so about the rally and the bounce off the trend line. I mean, I've got the daily chart up here, guys, and I shorted this actually. I was too eager. I pretty much shorted just as it turned there on it would have been about the 17th or the 18th, and I got in there off the 4 hour candle. And it sort of looked like it was breaking down there, and it wasn't really great, the setup, because I was sort of like, well, I was thinking that the Aussie'd run out of steam when it was not. It hadn't really shown signs of really complete weakness, because we were talking about breaking through 70 cents. It hasn't really done that at all, and it's bounced back again, and it struck me out at 71. 16. So it just chopped about, and I'm like, oh,
it had a good dig of trying to hit 70.
Yeah.
And as soon as it got down there, it spiked back up, and that would have taken a few people down, especially if you're looking at the weekly. It's had that really stiff downtrend, and it looked like it was going to go further, but it didn't happen.
No. It's resilient. It just sort of, I don't know if iron ore prices and gold, it's sort of it's clinging on to life here, guys. So if you are in a short and you're like, well, I shorted a little while ago, I would just, if you shorted it way back at the start of October when it pushed through that 71.80 odd level, and it still hasn't gone back up there again, there'd be no reason to close this. Like, you'd want just to sort of have the stop at break even and just see that. I mean, that's the thing about trend trading. It's not always going to collapse and just keep going. There's going to be some thrashing about, so to speak, and it's there might
be a bit of a retracement, I think, on the. I still think it could try and hit that 72, if not the 71.8. I think it'll hit that again, and then it'll test that sort of level and then go back down. I'm still pretty bearish on the Aussie, just with what's going on, where the little sister of China, and if they're going to be having any sort of trade war, if that's going to continue, we're not going to do too well. And also the housing market, Scotty, in Australia's been slowing right down. So I don't know, unless there's a real economic shock, like a macroeconomic shock, that could spiral it down. But it's just sort of going down slowly at the moment. Since its high, which was I think it was in November of 2017. It's gone down 6.2% in Sydney, and I think it's like 4.4% in Melbourne. So, and it's equated to about $1,000 a week loss in housing prices in both Sydney and Melbourne.
Yeah. So I mean, that puts a point pretty clear there, guys. So when you've got again, when Connor also mentioned that the trade war, that's not looking like it's getting resolved anytime soon, really, because they're just, both parties obviously have their own ideas of what they want to achieve, and it's a bit of a stalemate right now. So
I'm not actually sure why because if you have on the 4 hour, there was a big shunt down, big shunt up. I'm not sure if that was banks trying to, coming in and out of their trades. I don't know if it was macroeconomic news. It didn't look like anything really came out in the macroeconomic news for Australia that would have overly got it to want to move, because it's been going down pretty consistently, pretty slowly.
Yeah, I'll get the weekly up just to show you guys and always remember, when you're trying to come up with a trade plan, and we strongly encourage come up with your own. Don't just follow someone, because if you have no idea what the plan is, you've got no confidence, and if it pulls back on you, like what I'll explain in the next trade with my Kiwi short, then you're going to close out way too soon. You have no idea, and then it's going to collapse on you, and you're going to be in profit. Well, you would have been, but now you've lost money, and you're like, this is terrible, and you're going to be frustrated, and then it can lead to a bit of a reckless spree of trades, and you just do more damage. And that's why Forex is so bad for people that have no idea what they're doing, because they can just lose money so easily. So yeah, good call, Con. It has been steadily decreasing. So it's interesting. The weekly candle on the Aussie is interesting, isn't it? It's sort of a little bit of a the wick's not big enough though to be anything interesting though in regards to like a turning point though, would you say?
Yeah, and especially since it's been going down so consistently.
Yeah, that's
like, I mean, you look, you've got what we would call a kangaroo tail, or Pinocchio bar or whatever. But I mean, 2 candles next to it, it's a real bearish candle. So
yeah, that's right, guys. So if you're thinking reversal, be cautious, because I know a lot of people they like to get in at good values. But just remember the trend, when it's like that, can really overpower people that want to just jump in on a reversal and do that like that. So be cautious. Now, I'll get the Kiwi up quickly just to discuss that. So I got in on this short on the Tuesday it was. So I got in, and it really on the weekly, it's really good as well. So that was the context of this trade. Now, it didn't really behave straight away, and I sort of forgot about it. And I was like, okay, this is not looking too good. But I got in here, and it thrashed about. It popped up again, and then I wasn't watching it, and then it went down and hit the target, and then it bounced right back up. So it's quite interesting right now with the markets and everything that's going on, and the US dollar and the equities market. You've got to show a bit of caution, because especially if you're sort of playing the shorter time frame game and you just have a trade and you let it go against you and you're like, oh, it's going to turn, because obviously if you magnified it down, if 10 pips is like 1%, that could get really catastrophic. So either be really patient or be very quick with taking profit. Like if you are just risking 10 pips, because things have just been jumping around all over the place, and Donald Trump loves talking on Twitter as well. But he's been all right recently. I know a little while ago he talked about Powell and how he sort of wished he didn't appoint him, and he was like, interest rates are too high and all that.
Yeah, he's been saying that. He's been having a bit of a sook. He's like, you let Obama have 0 interest rates. Why won't you let me?
Yeah.
It's like, that's not how it works, mate.
That's right. It is. So again, I've got the weekly up, guys. So it is interesting. Like if you're looking for a trade idea, Connor and I were discussing really to the point before we started filming. There's not anything fantastic. Like unless you just short it and leave it with a big stop loss, have sensible risk. Other than that, we have the risk disclaimer up obviously for 10 seconds before we start talking. So look at that and then think about, what do I want to do? So you got to be a bit cautious. Now, I've got the Dow Jones up here, Con. Is there anything you want to add chart-wise?
Yeah, that's fine. And also with the Dow Jones, that's just going sideways too. It looks like it may just go sideways for a little bit longer.
Yeah.
And then maybe the correction will go up, or we all go to hell in a handbasket.
Yeah, so I've got the 5-day up, guys. So that's what we're talking about when Connor mentioned the sideways. It's not like ultra panic. It's not like 2008. But at the same time, it's an interesting, on the yearly, it's not catastrophic either. Like everyone was freaking out, but these things have, like in February, it sold off a little bit as well. So it's still uptrending. Like on the 5-year, if you look at the 5-year, then you sort of put in context. It's like, well, if you got stocks in 2015, you'd still be pretty happy. Like, it's obviously the guys who've just jumped in and they're all like, oh my God, it's turning. But it's still, the 5-year is interesting perspective. Always sort of look at that, guys. Don't just but the equity markets obviously do affect the Forex markets a little bit as well. So with risk on, risk off or whatever. So it's just interesting to see how they play out together, and you know, if you are looking to take a big position on something and everything's weak, you just sort of have to be wary that, you know, it might go against you. Don't have a really tight stop loss and certain things if you're unsure of things. So, and be sensible risk management, which people hate to hear. They're like, no, I want to make money right away. And back testing, it's just not, no. But yeah, so that's the current situation, guys. Now, what we could do, Connor, is we didn't even discuss this, but I mean, we could do a little backtest example maybe next week or something, because a lot of people don't know about backtesting really, and it's helpful.
And that'd be a good idea.
Yeah, and you don't lose money, especially when things are like this, because it's not that attractive. Like longer term, you got to just sort of be a bit patient and let things play out. And yeah, I think that's about it. Was there anything else that you discussed housing prices, and that's looking pretty dire?
No, I think that's about it, Scotty, for this week.
Yeah, that's it. So, you know, guys, Saturday episode. I hope everyone's enjoying them. Again, you got any comments, leave them. We'll happily answer any questions. And that's about it. Again, Connor, thanks for joining us as well.
Thank you.
And have a great weekend, guys, and bye for now.